Hey everyone, and welcome back for another deep dive. Today we're tackling something that's been making waves, cryptocurrency. I know it can seem like a whirlwind of jargon and hype, but we're here to break it down and give you the fundamentals.
Yeah, we'll be exploring what cryptocurrency is, how it works, and even how it holds value. We'll cover that. Plus, because safety is paramount, we'll delve into some essential things to consider before you even think about dipping your toes into this exciting but potentially risky world.
Perfect. To make sure we're all on the same page, let's start with the basics. What exactly is cryptocurrency?
Well, you can think of it like digital money. Unlike the dollars in your bank account, cryptocurrency exists purely in the digital realm. It uses cryptography, this sophisticated form of computer security, to ensure secure transactions and control the creation of new units.
Okay, so it's digital and secure, but what gives it value? Why are people willing to pay real money for something that only exists online?
That's where things get interesting. Unlike traditional currencies that are backed by governments, cryptocurrency's value is determined solely by market forces. It's all about supply and demand, how much people are willing to pay for it at any given time.
So it's like a digital version of gold or a collectible item. Its value is based on perception, market trends.
Exactly. And that's why you see those dramatic price swings with Bitcoin and other cryptocurrencies. Remember when Bitcoin soared to nearly US $70,000 in 2021, only to drop to around US $35,000 a few months later? That's the volatile nature of this market.
That's a roller coaster ride. But I'm curious about how these transactions actually work. Is it like sending an email?
Not quite. It involves this fascinating technology called a blockchain, which acts like a giant public ledger, that records every cryptocurrency transaction. Imagine Alice sending Bob some Bitcoin.
Okay.
That transaction gets broadcast to the entire network of computers that maintain this blockchain.
The entire network. Isn't that a bit overkill for just a simple transaction?
Well, it might seem that way, but this decentralized system is what makes cryptocurrency unique. No single entity controls it. Instead, there's a network of miners who use their computing power to verify and add these transactions to the blockchain. This confirmation process isn't instantaneous, but it ensures transparency and security.
So there's no central bank or government overseeing these transactions. That's both impressive and a little daunting. Speaking of daunting, let's talk about safety. What should people be aware of before they even think about buying any cryptocurrency?
Well, safety is paramount in this space because it's largely unregulated. Unfortunately, we've seen a surge in scams targeting those looking to make a quick buck. The Department of Insurance, Securities, and Banking has issued warnings, especially for minority investors who are often disproportionately targeted. Remember, if it sounds too good to be true, it probably is.
Absolutely. And I've heard these scams can be very sophisticated, preying on people's hopes and dreams of financial freedom. What are some red flags people should watch out for?
Be wary of finfluencers promoting investments without disclosing potential risks or conflicts of interest. Don't fall for promises of guaranteed returns or pressure tactics that urge you to buy now before it's too late. Remember, you should only invest what you can afford to lose.
That's a crucial point. Cryptocurrency is inherently volatile, and there's no guarantee you'll make money. Now, let's say someone's done their research and decided to take the plunge. How do they actually buy cryptocurrency?
Well, there are a few ways to get started. One common method is through cryptocurrency exchanges like Coinbase or Binance. They act as platforms where buyers and sellers can connect and trade various cryptocurrencies.
So it's a bit like online stock trading, but for digital currencies.
Yeah, you could say that. But remember, not all exchanges are created equal. Do your research, choose reputable platforms with strong security measures, and be aware of potential fees.
That makes sense. And what about when you want to cash out? How do you turn your cryptocurrency back into regular money?
You can typically sell your cryptocurrency on the same exchanges where you bought it. They'll usually allow you to transfer the proceeds back to your bank account.
So you can go from dollars to Bitcoin and back to dollars again.
Exactly. But again, be mindful of fees and potential delays in the transfer process.
Great points. It sounds like doing your due diligence is crucial every step of the way, whether you're buying, selling, or just learning about cryptocurrency.
Absolutely. This is a complex world with its own set of rules and risks. Take your time, research carefully, and never invest more than you can afford to lose. It's fascinating to think about how this whole cryptocurrency thing, how it even came to be. It didn't just appear out of thin air, right?
You're right. There's a whole backstory there. And I have to admit, I'm curious about how it all started. Where did this idea of mintable money even come from?
Yeah, well, the concept of digital currency has actually been around for decades, but it was the mysterious Satoshi Nakamoto who really shook things up with the creation of Bitcoin back in 2009.
Satoshi Nakamoto. That name's like a legend in the crypto world. And the mystery surrounding their true identity just adds to the intrigue, doesn't it?
It definitely does. We still don't know for sure if it was an individual or a group of people, but their creation, Bitcoin, was revolutionary. It was the first successful implementation of a decentralized digital currency, meaning no central bank or government had control over it.
That's pretty mind-blowing when you think about it.
Yeah.
A currency operating outside the traditional financial system.
Yeah.
And it all relies on this technology we keep hearing about, blockchain. Can we break that down a bit further? I feel like we've touched on it, but haven't really dived deep into how it works.
Sure. Imagine a digital ledger, like a record of transactions, that's constantly being updated and shared across a massive network of computers.
Okay, yeah.
Every transaction gets recorded in a block, and these blocks are linked together in chronological order, forming an unbreakable chain, hence the term blockchain.
So it's like a chain of digital records, and once a block is added to the chain, it can't be altered or tampered with.
That's right. And it's incredibly secure and transparent because every participant in the network has a copy of this ledger. That's what makes blockchain so revolutionary. It's a tamper-proof system for recording and verifying information.
No wonder people are saying blockchain has the potential to change so many industries, not just finance. But for now, let's stick with cryptocurrency. We've talked about Bitcoin, but it seems like there are thousands of other cryptocurrencies out there. How do they differ from each other, and how do you even begin to make sense of this vast and ever-changing landscape?
It's true, the world of cryptocurrency is constantly evolving. New cryptocurrencies are emerging all the time, each with its own set of characteristics and goals. Some focus on privacy, others on speed, and some even have like a social mission. For example, some cryptocurrencies are designed to support renewable energy initiatives or charitable causes.
So it's not just about making money. There are actually cryptocurrencies with a conscience. That's pretty cool.
Well,
But how does someone navigate this complex world? It can feel overwhelming, to say the least.
The key is to approach it with like a cautious and discerning mind. Don't get swept up in the hype or blindly follow the crowd. Start by educating yourself. Understand the technology behind a particular cryptocurrency, its intended use, and its potential risks.
So do your research, be informed, and don't just jump in head first. That sounds like solid advice. But let's say someone's done their homework and is ready to take the next step. What are some practical tips for buying, selling, and even using cryptocurrency?
Well, we talked about exchanges earlier, and those are definitely a common way to buy and sell crypto, but there are other options too, like brokerage accounts that allow you to trade both stocks and crypto in one place. And for those looking for like more direct transactions, there are peer-to-peer platforms where buyers and sellers can connect directly.
So there are options for different levels of comfort and experience. But no matter which method you choose, security should always be a top priority, right?
Absolutely. Make sure you're using reputable platforms with strong security measures and be cautious about sharing personal information or financial details.
And remember, it's not just about buying and selling. Some businesses are starting to accept cryptocurrency as payment, so you might actually be able to use it for like real-world purchases.
That's right. The adoption of cryptocurrency as a means of payment is still in its early stages, but it's gradually increasing. You might find, coffee shops, online retailers, and even some major companies accepting Bitcoin or other cryptocurrencies.
So it's slowly becoming more mainstream. But I imagine there are still challenges when it comes to using cryptocurrency for everyday transactions.
Yeah, one of the biggest hurdles is price volatility. Imagine, buying a cup of coffee with Bitcoin one day, and then the next day the price of Bitcoin plummets. Suddenly that coffee costs you twice as much.
Ouch. That's not exactly encouraging for merchants or consumers.
Ugh.
Is there a way to address this issue of price fluctuations?
Yeah, that's where stablecoins come in. These are cryptocurrencies that are designed to maintain a stable value, usually pegged to like a fiat currency like the US dollar.
So stablecoins offer a way to use cryptocurrency without the risk of wild price swings.
Exactly. They provide like a bridge between the world of cryptocurrency and traditional finance, making it more practical for everyday transactions.
That makes a lot of sense. So we've got this whole ecosystem of cryptocurrencies, blockchain technology, and now stablecoins. It's definitely a lot to take in, but I'm starting to see how the pieces fit together.
Yeah, it's a complex but fascinating world, and it's constantly evolving. But at its core, cryptocurrency is about innovation and exploring new possibilities for finance and technology.
And as with any innovation, there are risks and challenges to consider. We've talked about scams and price volatility, but what about the bigger picture? How does cryptocurrency fit into like the broader financial landscape? Is it a threat to traditional banks and institutions?
That's a question a lot of people are asking, and the answer is it's complicated. Some experts believe that cryptocurrency could disrupt traditional finance, while others see it as more of a complementary force.
So it's not necessarily a winner-take-all situation.
Right. Cryptocurrency offers some advantages, like faster transaction times and lower fees, but traditional finance has its strengths too, like stability and consumer protection. The future of finance likely involves a blend of both approaches.
That seems like a reasonable assumption.
Yeah.
So it's not about choosing sides, it's about understanding the strengths and weaknesses of both systems. But what about the future of cryptocurrency itself? What are some of the emerging trends we should be keeping an eye on?
Well, one trend that's gaining momentum is decentralized finance, or DeFi for short.
DeFi. That sounds intriguing. What's that all about?
Think of it as a parallel financial system built on blockchain technology. It aims to recreate traditional financial services like, lending and borrowing, but without the need for banks or other intermediaries.
It's about cutting out the middleman and giving individuals more control over their finances.
That's the idea. DeFi is still in its early stages, but it has the potential to revolutionize how we access and manage our money.
That's pretty revolutionary. Any other trends on the horizon that we should be aware of?
Another area to watch is the growing intersection of cryptocurrency and the metaverse.
The metaverse. That's another buzzword we hear a lot these days. How does cryptocurrency fit into that virtual world?
Well, as people spend more time in virtual worlds, they'll need ways to transact and manage their digital assets. Cryptocurrency could play a key role in facilitating those activities. Imagine buying virtual real estate or digital fashion items using cryptocurrency.
So we might be paying for virtual experiences with digital currency. That's wild. It seems like we're on the cusp of a major shift in how we interact with money and technology.
It's definitely an exciting time to be following the world of cryptocurrency. The convergence of these trends is creating like a dynamic and rapidly evolving landscape. But as we've emphasized throughout this deep dive, it's essential to approach it with a balanced perspective, a healthy dose of skepticism, and a commitment to ongoing learning.
Those are important reminders. So as we wrap up this part of our deep dive, let's leave our listeners with a few key takeaways. What are some of the most important things to remember as we navigate this complex world of cryptocurrency?
First and foremost, remember that cryptocurrency is still a relatively new and experimental technology. There are risks involved, so it's crucial to understand them and invest only what you can afford to lose.
Absolutely. And what else?
Do your research. There's a wealth of information available online. Be sure to consult reputable sources and be wary of scams and misleading promises.
Great advice. And finally,
stay curious. The world of cryptocurrency is constantly evolving, so be open to learning new things and adapting to the changing landscape.
it's amazing to think about all the ground we've covered, from the technical side of blockchain to the potential of cryptocurrency to disrupt traditional finance. What really struck me is this idea of decentralized finance, or DeFi. It sounds almost like a financial revolution in the making.
Yeah, it definitely has that potential. DeFi aims to create a more open and accessible financial system, one that's powered by technology and governed by code rather than centralized institutions.
So instead of relying on banks to facilitate loans or handle transactions, these functions would be automated through smart contracts on a blockchain.
Exactly. And this could lead to more efficient and transparent financial services, potentially benefiting individuals and businesses that have been underserved by traditional systems.
It's exciting to think about the possibilities, especially for people who lack access to traditional banking services.
Yeah.
But what about the risks? Are there any concerns about security or stability in this decentralized world?
That's a valid question. DeFi is still in its early stages, and like any emerging technology, it comes with its own set of challenges. Security is paramount, as vulnerabilities in smart contracts could be exploited. And the lack of regulation could pose risks for users who are not familiar with the complexities of this space.
So, while DeFi holds immense promise, it's important to proceed with caution and awareness. Just like with any investment or financial decision, education is key.
Absolutely. It's crucial to understand the technology, the risks, and the potential rewards before diving into the world of DeFi. But beyond DeFi, there's another fascinating development we touched upon earlier, the intersection of cryptocurrency and the metaverse.
Yes, the metaverse. It seems like everyone's talking about it these days. But how does cryptocurrency actually play a role in this virtual realm? I'm still trying to wrap my head around that.
Think of it this way. As we spend more time in virtual worlds, we'll need ways to interact, transact, and own digital assets within those spaces. Cryptocurrency can provide the infrastructure for like a secure and decentralized economy within the metaverse.
So instead of using our credit cards to buy virtual goods or services, we might be using cryptocurrency.
Precisely. Cryptocurrency can facilitate seamless and secure transactions within the metaverse, allowing users to buy virtual real estate, digital art, or even virtual clothing for their avatars.
That's incredible. It sounds like science fiction, but it's actually happening right now. It makes you wonder, what other transformative applications for cryptocurrency and blockchain are just around the corner?
That's the beauty of this space. It's constantly evolving and pushing the boundaries of what's possible. But as we explore these exciting possibilities, we must also consider the ethical implications and the potential risks.
You're right, it's easy to get caught up in the hype, but we need to be mindful of the broader impact of these technologies. What are some of the key considerations as we navigate this uncharted territory?
Well, one important aspect is sustainability. As we discussed earlier, some cryptocurrencies require a significant amount of energy to mine, which can have environmental consequences. It's crucial to support the development of more energy-efficient cryptocurrencies and to explore the use of renewable energy sources for mining.
That's a critical point. We need to ensure that the growth of the crypto ecosystem doesn't come at the cost of our planet's health.
Another important consideration is accessibility. Cryptocurrency has the potential to empower individuals and promote financial inclusion, but we need to make sure that it's accessible to everyone, not just a select few. We need to address the digital divide and create pathways for wider adoption, especially in underserved communities.
So it's not just about the technology itself, it's about ensuring that the benefits of that technology are shared equitably.
Exactly. And finally, we need to be mindful of the potential for misuse. Cryptocurrency, like any form of currency, can be used for both good and bad purposes. We need to be vigilant about preventing illicit activities like money laundering and fraud, and promote responsible use within the crypto community.
Those are all essential considerations as we move forward. It's clear that cryptocurrency and blockchain technology have the potential to reshape our world in profound ways. But it's up to us to ensure that this transformation is positive and beneficial for all.
I couldn't agree more. We need to approach this space with a combination of excitement, caution, and a deep sense of responsibility. The choices we make today will shape the future of cryptocurrency and its impact on society.
That's a powerful reminder and a perfect note to end on. This deep dive has been an incredible journey filled with fascinating insights and thought-provoking discussions. Thank you for sharing your expertise and guiding us through this complex but captivating world.
It's been my pleasure. And to our listeners, thank you for joining us on this exploration of cryptocurrency. We encourage you to continue learning, stay informed, and engage in the ongoing conversation about the future of this transformative technology.
And as always, thanks for diving deep with us.